It was quite interesting today that UK base rates was on hold. In other words, the rate decision was not to change UK base interest rates from 5.25. So it's still at 5.25 just now. So what does that actually mean for the UK economy and the UK property market itself? Well, let me just explore that. If we've taken some other figures as well and other dynamics. So UK base rates at the Bank of England is 5.25% just now. The unemployment rate creeped up from 3.8 to 3.9 last month. I mean, that's nothing really tragic or disastrous. Full employment in economic terms is still between 4 and 6%. So we're actually doing better than full employment in economic terms. Inflation's come down to 3.4%, which is really good news because it means, well, according to the Bank of England, it means what they're doing with the base rates being high is actually curbing spending, apparently, and therefore actually bringing down the inflation rate. I think the inflation rate is just happening naturally anyway as a result of what we're doing. Interesting to see though that wage growth is still at 6.1% year on year. Now, how is that going to affect inflation? I mean, inflation's at 3.4%. So real terms, then that means people are actually better off the wage growth if you take that into account by just under 3%, about 3.8 or 3.7 or thereabouts. So that's 2.7. Sorry, I stand corrected. 2.7 for anybody who noticed that what I just said there. So 2.7 better off than expected in terms of wage growth versus inflation. So the Bank of England is obviously justly nervous about the fact that if wage growth continues to be more than inflation, will that actually filter through and with more spending and higher spending from the public, and therefore exacerbating inflation again with the limited resources and pushing up prices again. So that's why they're a bit nervous about putting base rates down right now. Borrowing is higher than expected. This is the borrowing the government does month by month with the tax receipts. So borrowing was 8.4 billion. Jeez, I can't comprehend that just in 1 month. 8.4 billion borrowing the tax and the government. So that's what they've got coming in tax receipts versus what they're having to borrow from the bank in order to finance the UK economy. Better than expected, better than last year. But I wouldn't say better than expected. But economists predicted 6 billion in borrowing. However, cost of living measures and what's going on and the benefits that they're having to pay out for the cost of living crisis that they promised had meant that the extra money was needed in order to do that. Hence, the reason why borrowing was 8.4 billion. But better off than last year. You know, last year was a lot higher in terms of borrowing at this time last year. So we're actually faring quite well, and it's kind of what the Chancellor says and the Prime Minister says. Are we turning a corner in terms of the economic so-called recession? I mean, it's only 0.1% minus over the last couple of quarters or something like that. And we've had growth already. So do we need another growth to actually say we're officially out of recession? I think we're not even in recession, to be honest. There's no such thing, but it plays into the media's hands. So how does this affect overall in the property market itself? Property market still remains quite resilient right across the whole of the UK itself. As I said before, I talked about the UK, the worst parts, and the step-by-step process it takes for selling a house. But just now in Fife, it takes 71 days to sell a property in Fife on average. But most of these properties are actually selling quicker from the 300,000 price point and downwards. In other words, 200 to 300,000 properties are taking 81 days. 100 to 200,000 properties are taking 52 days, and up to 100,000 are taking 59 days to sell. As soon as you go past the 300,000 price point, you're getting in 96 days, which is up to 400,000 level. Up to the 500,000 level, from 400,000 is 102 days. 500,000 to 1,000,000 is taking 138 days, and 1,000,000 is taking 206 days. So you can see how it's a typical example about the affordability levels and the very fact that as you go higher in price, less and less people can afford it. Therefore, you're basically coming to a market of about 2 or 3 people, a property that's over 1,000,000 in Fife. That's all you've got. Hence the reason it'll take a lot longer to sell, because you've got a limited market in the number of people looking for it. That's why the ones at 100,000 up to 300,000 are faring quite well, because affordability levels are still quite good in comparison to what they might have been, actually, what they might have been. Remember, base rates at 5.25%. However, the mortgage companies actually are going out their way to give offers which are far lower than that. How can they do that? Well, the interbank rates and the swap rates between the banks and interbank lending is a lot less. It's all done on risk, how they perceive each other for risk, how they perceive the UK economy for risk. And the UK economy is actually still faring quite well in terms of Standard and Poor's and Moody ratings. That's the AAA rating and the AB rating, or whatever it is. AAA rating is usually the best rating you can get for an economy, which means most people will lend you money as an institution at a very low rate, because Standard and Poor's and Moody's sees you as a very low risk. Therefore, you get better rates as a result. Simple. When you're a high risk, you have to pay higher rates, because it's more likely more people will default at that rate, and therefore the higher risk, the ones that do pay, will pay for the ones that default overall. Hence the reason why, if you're lesser risk, you'll get a lower rate. That's it. That's all it's down to. So loan to value and equity in a property is a really vital thing. If you've got a huge amount of equity in your property right now, what I'd suggest you do, if you're on a standard variable rate mortgage, I'd suggest you go and speak to a mortgage broker and actually talk to them and see what deal you can get for a fixed rate mortgage, or even a tracker mortgage, or even an offset mortgage if you've got savings put aside, because you can offset your savings against your mortgage rate as well, remember. I do that just now. I think my mortgage rate is something like 8%, and everybody goes, what, 8%? But I've got the savings to cover the mortgage, therefore I've got them in a separate bank account, so therefore it offsets the mortgage. So everything I pay to the mortgage is actually paying down the capital. I get charged no interest on my mortgage at all, because I've got an offset mortgage for that reason. If you're not sure what that is, and you're wondering how I'd pay no interest on my mortgage at all from month to month, then more than happy to point in the right direction and tell you all about that if you want to message me direct on this post. So the other thing as well, as I said, is mortgage rates are a lot lower than base rates just now. But what banks are cunningly doing, and watch out for this, if you're getting a 4.5% mortgage and you're thinking bank rates are at 5.25, that must be a really good deal. Watch out for the arrangement fee, because if it's over 2 years and you're paying a 3% arrangement fee, in essence, you're probably paying another 2% more than you should have paid before. Therefore, if you take that over the 2 years, it's 1% extra a year. So you're technically really paying 5.5% mortgage interest rate over the 2-year period. But remember, it depends on how long you hold on to the actual mortgage itself. So what they're trying to do is they're front loading, and then they're adding on to the mortgage, the arrangement fee, in order to get that money back without you knowing, and making the monthly payments a lot more affordable as a result. That keeps the property market very, very buoyant and balanced as a result of that. But as I say, we are still in some sort of hot sellers market from 300,000 downwards, and 300,000 upwards. It's more of a balanced market, I would say. It's certainly still not a buyer's market right now. Don't kid yourself. Don't lowball people. Don't insult them, because you'll often put a seller off, and they might actually not entertain you if your offer ends up being the right offer for them, for that simple reason. So be careful. If you want advice on how to make the best offer, we've got loads and loads of content online on our YouTube channel for that. I'm more than happy to share that with you. All you need to do is message me direct on this post, or you can contact us on any of the contact numbers for our offices: 01334 65 42 21, 01333 421 774, and 01592 75 2000. Until next time, guys, have a fantastic time this weekend. Brilliant weekend coming up. The weather looks pretty good as well. It looks pretty good. We're coming into spring. I've called it. Spring is just around the corner. We're probably in it round about now. We've maybe still got some snow to come. It's renowned, isn't it? It's renowned. As soon as you get to the end of March, the beginning of April, you get this sort of like freak 1 or 2 weeks, which has snow for some reason. I don't know why. We always get it, and the reason for that, I don't know. But we always get it, and that's what causes the problem when you take photographs when it's snowing and it's sitting on the ground, and then the next week it's beautiful bright sunshine, the daffodils and the snowdrops are out as a result as well, and everything's starting to go in full bloom. And then you have to retake the photographs again because they look out of date, and yet they're only about a week or two out of date. Okay, so that's what I could say about the property market right now. Base rates on hold. You've got unemployment rate still historically low, inflation coming down quite well. Office of Budget Responsibility, the OBR, actually quite clearly said in the next 2 or 3 months they expect inflation to fall considerably more, almost round to about the 2% level, and then we'll see what happens. Let's hope we don't overshoot it. If we do overshoot this, there's going to be trouble, because we don't want to be in stagflation. You want to be around about the 2% inflation level all the time. You just want to have a healthy economy, but you don't want to have it too high in prices. Therefore, it becomes unaffordable for people. Therefore, they get in the spiral of ever increasing wage increases, and then it keeps exacerbating inflation as well. Borrowing higher than expected, but better than last year. And it was only down to cost of living payments, the one-off payments that they're making anyway. So that should disappear next month. So it's no an ongoing commitment overall. And that's it. If you want any more information, please feel free. And yes, I will send you that link for the YouTube link. Okay, bye-bye for now.